wanted to make this week's video a little shorter and sweeter, and here's why. I want to try to drive home one absolutely critical concept, and I'm going to use one signal in order to do it. So we're going to explore Thursday's low, which was a massive Confluence long signal with everything uniting across the board in this ecosystem to give a massive buy signal. And the concept I want to drive home in the hopes that you can take it applicably into your week ahead is, if you guys remember from my Project Impact presentation when I was at the whiteboard, I tried to drive this concept home, is if you aren't trading through a Confluence lens, if you aren't looking at an ecosystem of things that you're trying to get information from across the board in components at one moment in time, prioritizing that information and trying to capture reversals at one same or similar moment in time, instead you're looking at just maybe one or two instruments with their key strategic levels, one or two levels in them. And so often what you're confronted with is when any given key level in an individual instrument either isn't quite reached, and so the market precipitates a reversal before that key level you were waiting for to add risk and try to get this reversal, or if that key level in a certain instrument doesn't work like you know it should have. So you spend all this time mapping these levels, creating these levels, trying to find out what the market cares about and what it doesn't. Hopefully this process involves backtesting. But you show up to the market focused on one thing on a given day, and that level in that instrument violates quite a bit, and then the market precipitates a reversal, perhaps seemingly in no man's land, and disrespecting your level entirely. This is almost always, and it's going to take practice and attention, but you will be abundantly rewarded if you do it. It's because a Confluence moment was playing out at one location in time, a similar moment in time, in an ecosystem of instruments across the board, most of which, almost all of which, were at their key levels, while you were focused on one level in space in one instrument or two instruments. So again, one big Confluence signal from this week, Thursday morning, and my hopes are to use it to illustrate this one concept, which is we can prioritize the information coming from the ecosystem, coming from Confluence, in a way that turns what could have been a frustrating trade focused on one level in one instrument into a very rewarding nailing or capturing of a reversal. Key levels that don't quite get reached, so you never trade, you never deploy the capital, because why would you? You didn't get your level, or levels that just don't work. Zoom out, Confluence lens, and can start to really make a difference. So Thursday morning, E-mini, S&P futures, we're coming down into the supply and demand level here with the band. This was a AB equals CD measured move, as we'll call them. So I'm just drawing the distance of that leg and copying it here. So that's an identical clone of that leg, AB equals CD, coming into this supply and demand level. So that's your kind of your first heads up. Here is the lower time frame. So what else was there at Thursday morning's low? Well, it's monthly pivot point, right? So three pieces of evidence there kind of combining to show on multiple different time frames that you're getting a Confluence, and this is just in this one instrument, the S&P 500 futures. So this low was also an anchored VWAP here, which you can see. This is SPY. I'm using an ES 405 minute chart here to show this anchored VWAP, which I've just taken from this swing low. My kinetic data on SPY has a bad tick, which makes the low seem like it was much lower than monthly pivot point on SPY, but it was. If you look at ES regular trading hours and the cash index, this was a very, very nice higher time frame anchored VWAP hit in SPY, as it was in all of the other ETFs. So this is NQ, the NASDAQ futures. Here's Thursday morning. We come down into this daily 20 period exponential moving average, nice hit, and that is also AB equals CD measured move, and that one's more or less to the tick there. So a nice heads up coming into Thursday morning in the NASDAQ futures. But here's where it gets really interesting. So looking at the lower time frame in NQ, the NASDAQ futures, you had this really, really big key level down here with supply and demand, weekly S1, the green level, the daily 20 exponential moving average on the RTH chart, and this was also daily S1. I have to scroll back to show you, but you can see that black S1, which would have been active at the time or during that session. So four really big pivotal pieces of information there waiting, and you're just ready to trade that level, and boy would it have worked, but it didn't hit, did it? So what conclusions do you draw? Do you just buy relative strength above or relative weakness below your key levels, basically chasing, totally reorienting the way you manage money? Don't actually buy the levels you spent the time mapping, buy above them in case they don't get hit. Or maybe you're the type of person that makes a really bad error, which is, okay, but this shorter time frame trend line worked. And so now let's follow that road down. So are we going to prioritize little tiny trend lines on a 5-minute chart over a huge strategic level with 4 pieces of evidence, the back tests of which are very powerful? These aren't the kind of conclusions which lead to a trading system adapting and evolving in the right way. The right way to think of this is, why did the NASDAQ reverse there instead of at this powerful level, which was just below? It's because a confluence moment was happening in like 65 other things across the board, including some of the ones we just went and all of the ones to follow. That's why the key level in this one instrument wasn't quite reached. That low was also an anchored view up in QQQ. Of course, the NASDAQ ETF, if I draw an anchored view up from that swing low, that would have been higher time frame 20 exponential moving average and higher time frame anchored view up at that low, further confluencing and explaining why this one particular look in this one instrument wasn't quite hit. Russell 2000 futures. Here's Thursday morning coming in. These yellow dash lines are gap fills, so untested prior regular trading hours closes. We come down into this supply and demand band and the gap fill. This was also A, B equals, copy and paste, C, D, measured move, got a little below, but certainly in play in real time for us at that time. And you look at the lower time frame, and this is the other side of the coin, guys. So this is where, if you pay attention, this can be a very, very fruitful thing to carry with you in your career. Sure, RTY, Russell 2000 futures, came down into the gap fill and the top end of the supply and demand. So you could say, without just perjuring yourself intellectually, that those 2 levels worked, but you could not say that it didn't basically just blow through annual S2 and weekly S2. So if you had just come to the market focused on small caps that day, focused on IWM, focused on the Russell as RUT, the cash index, or RTY, and you didn't know to wait for the confluence moment, which played out everywhere in the ecosystem at about 10 Eastern. If you didn't scale some at this supply and demand and weekly S2, ready to scale more at the confluence moment, maybe you take a stop there, or a break-even trade, or you spend psychological capital frustrated that you backtested AS2 and it's an absolute beast and it just didn't quote-unquote work. Prioritize the information coming from the ecosystem across the board, because at 10 a.m. that was saying this is a gigantic trade, and that takes precedence over the individual levels in individual instruments, even if you have the right levels. That low was also anchored view up, higher time frame in its ETF. If I draw an anchored view up there from the swing low in IWM, you'll see that was just a couple ticks lower. That low, perfect. So SPY, IWM, and QQQ are all really nice higher time frame anchor view ups there at the low with all the other pieces of evidence. And we never really looked back at these lows. So if I just draw a simple anchored view up from the swing low I'm talking about, you can see we held it 1, 2, 3 times in ES. Just a good sign that that low was going to be pretty impactful and that sellers weren't going to be able to get that too much lower as the rest of the week played out. NQ holding it 1, 2, 3, 4 more times into Friday's rally. So to summarize, confluence all at the same moment in time with major levels across the board in the ecosystem. The reason that individual levels sometimes don't work or don't quite get reached and so you don't get to participate is because the most important information about any given reversal is coming from a same or similar moment of time, not your pet level in your pet instrument. So something that we found really, really key in the confluence lens from a practical perspective, not theory, but how do you actually get this ecosystem into your eyeballs, into your brain, into your method, is these quads, which you can see we call them the quads. It's just 4 instruments stacked on top. You can see I have a bunch of them tabbed here. So it's really a deep look at the anatomy of the modern market here, and this is just half of one of my 8 screens, and I have 16 instruments here. So look at Thursday's low on this quad. This is the NASDAQ composite on the top here. It's low, daily S1, weekly S1, 20 period exponential moving average on the daily. Same moment in time, 10 a.m. Eastern. NYA, the New York Stock Exchange Composite, weekly S3. Same moment in time, 10:05 Eastern. The Dow Jones Transports, MS1, weekly S3. At the same moment in time, semiconductors with the cash index SOX, monthly pivot point, daily S1, same exact identical moment in time. Confluence level there in SOX working all day at the lows the prior day, and then a little move to the next confluence level with two pieces of evidence, and then bounce up to the 20 EMA, reclaim that upper confluence level. But the reversal happened at that moment in time. It didn't necessarily care so much about the support level that worked so well the prior day, even though it was confluential in the individual instrument. So if you're a leverage and liquidity junkie like me, you could have played that SOX using the triple leverage short ETF SOXS. It had its own pair of signals at highs, weekly R1 and daily R1. Notice different levels than were actually active in SOX, just more confluence. Really nice all-day fade, almost $2 a share if you wanted to long semiconductors using SOXS. SMH, excuse me, is just another semiconductors ETF. Really nice signal as well. Looks pretty similar to SOX, but monthly pivot point, it was daily S1. If I scroll there, see that little green S1, and then the 200-day simple moving average, if I recall correctly, and I see if I embarrass myself here, it was an anchored view up as well. Yeah, almost to the tick there, anchored view up on Thursday's low in SMH. And so lastly here, let's look at the what we consider to be the four main NASDAQ stocks and take a look at Thursday's low. I'm going to start from the bottom here. Microsoft, 20 exponential moving average, weekly S1, daily S1 there at the lows. Same moment in time at first, and then a nice retest. I'm sure the calls there, given that half the session almost had expired, went crazy into close. Apple, same moment in time, daily S1, weekly pivot points. Google, same moment in time, pay attention, weekly S1, 20 EMA, daily S1 would have been a great level if it had hit, but it didn't. So again, if you come into this day as a Google trader and you're blind or oblivious to what's happening at 10 Eastern, you know, in Amazon, sure, it would have worked, but in Google, it didn't. In Google, maybe you're rethinking your levels, or why, you know, Google didn't get to its level. Maybe you don't even trade it, or you buy up and learn bad habits. It was a confluence signal. The ecosystem was saying this is the moment, and Google was just not quite ready because of strength, relative strength, to get to its key level. Amazon, another relative strength, obviously. These other three stocks taking out Thursday's low at the confluence low. Amazon not even close, holding annual R2, same moment in time, nice move into close, caught a good bit of that. That's a really nice trade. I think that's it. Nvidia had a really nice signal as well, as did a lot of stocks. I think that you get the point, and I hope this is something that you can carry forward actionably and applicably into the week ahead of you. Hope everybody is healthy and strong. Cheers.